Today I want to give you an update on my dividend portfolio from a European investor's perspective, because most of the videos I watch myself on YouTube are mostly from a US perspective, and they have some amazing dividend ETFs that you can invest in and really get nice dividend income from an ETF, which is amazing. Unfortunately, in Europe, we don't really have access to a lot of those great low-cost ETFs, and therefore for Europeans, I believe it's a better option to pick high-quality dividend-growing companies. With this, let's hop over into my portfolio. My main broker of choice is Interactive Brokers. However, the platform is definitely not the prettiest to look at, and when I show you my portfolio, it's actually really messy. It's not very clear. I don't even see how much dividends I got from it. I have to really drill down into a number of reports to finally get to the number of dividends I've earned and dividend projections for the future. So for me, that's a really powerful platform to invest, but to get data and analytics from it, not so much. But for that, I have the perfect solution. After looking around and trying so many different dividend trackers, I finally found the one which is called Dividend.watch. It's an all-in-one tracker for obviously dividend investors. As it says over here, you can follow up to 60,000 stocks and ETFs, and really nice interface. So I'll show you in a second how mine looks, but really love it. They do have a free and a paid plan. If you want to check it out, then please do use my link in the description below. Right, with this, let's hop over into my portfolio. Just click on the tracker over here, and then you can see over here my portfolios. They have two options to import your portfolio. You can either manually import it, then you have all the history of all your trades, which is great, or you can just extract all the data from your current broker and import them with a CSV file, or you can actually link if they're supported directly to your broker, which is the easiest option of all. And you can click over here on supported brokers. You will see who's supported. So not all of them, but quite a number of them. In my case, as I said, I use Interactive Brokers, but even for Robinhood, DeGiro, one of the biggest ones in Europe. As you can see, I have an auto option and a manual one, because the manual one shows your history. So I tend to prefer the manual one. Yes, it takes a few clicks more, but I simply go into my Interactive Brokers, export all my data, and then import it right here. And then I have it right here updated to the latest price. So when I click into it, you can see over here, that's basically my entire portfolio you've seen previously on Interactive Brokers, but much nicer visualized over here and much more insights, especially from a dividend point of view. So when you're being greeted, obviously you see here your portfolio value, and then very interesting, your total dividend yield, which is something I couldn't easily find on Interactive Brokers. So you can see over here, my current yield of all my holdings is around 1.55%, which is obviously not where I want it to be. I would like it upwards of 2.5%, 3%. But now that I'm consciously investing more into dividend growth stocks, I'm sure it's gonna get there. My total return is certainly not the best, but I guess looking at the markets we're in, that's the case for many investors. But once again, I look at 10, 20, 30 years, I have no doubt it's gonna return to a nice healthy growth. In total dividends received so far, only 161 euros. Now that I'm getting serious and invest exclusively in dividend stocks, that number is sure to go up in the future. Then you have a few other metrics like your average PE ratio of your various holdings. And then here, that's a very interesting number, your annual dividend income for that particular year. And that obviously increases automatically as I keep making new transactions. In my last video about dividend stocks, actually, I was only at 195 euros. Now I'm already at 215. So you can see, just by adding a couple of positions of dividend stocks, you can immediately increase that. And for me, that's really so rewarding to see, because it means every purchase I make, it doesn't matter if the stock price goes up or down, in the end, I'm still gonna get more dividend income for the year. Of course, that assumes that not all of the companies mysteriously start cutting the dividends overnight, but that's highly unlikely. And history has shown us that a lot of the companies have been paying for the last 20 or 25 years and increasing their dividends year over year. So I'm pretty confident on that. Then you have here yield on cost, and that's really an interesting metrics that's often underrated. People only look at the dividend yield, which is the current dividend you get compared to the current price of the stock, right? Imagine you buy a stock for 1,000 euros and you get 20 euro dividend. Now let's imagine a couple of years down the line, the stock price went from 1,000 to 2,000 and your dividend has grown from 20 to 40 euros. It's still going to be a 2% dividend yield. However, the difference is, assuming you haven't bought any additional shares in that company, your cost basis is still only 1,000 euros. And that's a 4% return compared to a 2% dividend yield, what other investors have. If they buy into the price at 2,000 euros, you're technically getting a 4% return. And that's the power of dividend growth investing. Right, and over here you can see my performance visualized, and obviously has been increasing quite nicely, especially since the beginning of the year. Obviously, stocks have been looking brighter. 4.5% growth, so that's really nice. S&P 500 is obviously up as well. Plus, I did make some cash injections as well, so that's obviously factored in here as well. But if I go to the maximum, obviously, still doesn't look too good, minus 9.3%. But once again, I'm quite bullish on the long-term positive development of the portfolio. portfolio. And then we come here into my holdings. So you can see not too many, but actually now, as I said, I'm really getting interested and serious about committing to dividend investment. I started back in 21 within the active brokers, but then really got sidetracked investing heavily into crypto. But now obviously we all know what happened to crypto. So that's why I'm coming back to dividend investment and really invest weekly or at least on a monthly basis and put money into my various holdings, and definitely want to add also a number of more holdings into it. So as you can see over here, my biggest holding in the position is actually the Vanguard S&P 500 ETF. So that's one of the better ETFs we can buy here in Europe. It has an expense ratio of only 0.07%. So that's very cheap actually. And it tracks the S&P 500 in the US. We cannot buy VOO, which is basically the S&P 500 ETF in the US, but as Europeans, we have to buy UCITS ETFs. So they're slightly more expensive and not really 100% like the American version, but it's a pretty good alternative for Europeans. You can see over here, current market value, and it actually has a dividend yield as well, though it's rather low, 1.37%. For me, it's not super high, so it's not really a dividend payer I can really retire on in the future, but it's nice to have in addition to following the overall market to still get a little dividend yield. You can see right now, because it is my biggest size in the portfolio, despite the low yield, it still has the highest annual income. But now that I plan to invest into more higher dividend payers, definitely that number will shift. Then I have, of course, Google, Alphabet, and that's my only non-dividend payer in my entire holdings. And I was debating, should I sell the stock? Because I'm really so excited to get more dividend income, but at the same time to sell Google right now, they actually dropped in price anyway, so it wouldn't be the best time. But at the same time, I think it's still good to have tech and growth stocks in your portfolio, because long term, you still want to have a bit of growth component, because a lot of the big dividend payers are sometimes more the traditional established companies. While they continue to pay, the growth of the capital appreciation of your investments usually comes from those kind of high growth tech companies. So I'm not going to sell it, I'm going to keep it. But yeah, I mean, it's not a huge position, but still, despite the fact they're not paying me dividends, I'm definitely going to hold on to them. Then Apple, obviously nice to see that the most valuable company in the world, which they still are, has started paying a couple of years ago a dividend, though the overall yield of 0.61 is fairly small. So I will continue buying them, but in smaller chunks, because I want a higher, juicier dividend yield. Then of course BlackRock, who technically really run the world. I mean, they're involved in literally everything across the world. Some people love them, a lot of people don't like them at all, and they've really been performing very well. If I click into this, you will see over there, which is also really cool. You can click into this, you can see here your individual holdings, etc. And then you can click on visit stock page to get a bit deeper insights into what they do, etc. So you can see over here the price development and so on. You can get a little abstract of what they're doing, and you can see really, if you read through it, I mean, they're literally involved in pretty much anything. If we click into stock analysis, you can get also some good insights. You can get the dividend safety score. That's a paid plan feature, but really indicates how well they're doing. For example, the payout ratio for me always something interesting to look at, how much of the earnings they actually use to pay out shareholders. Sometimes that number is over 100%. That means they're borrowing money to pay dividends to shareholders. And as a company, I don't think that's very sustainable, and it really doesn't make sense for a shareholder. They might be better off just cutting a dividend. So the fact that they use only around 60 cents for every euro they earn to pay out to investors, you know, it's a little bit high, but overall really still an acceptable number. Then you can see here the dividend growth, the compounded annual growth over time, and that's very important. As I said, I want to dividend growth invest, not just dividend invest. So I don't just look at the yield, the current yield, and hope it will stay flat, but I want to see the growth development over time. And you can see here for the last 3 years, it has been an average 10.37%. So that's really, really healthy. And then they compare it to some sector averages over here. So that's a good matrix to see, you know, how they're doing compared to others. You can see in terms of payout ratio, they are a little bit higher than the average other competitors, but overall still very much in line. And I think the PE ratio of 20 is still fairly healthy as well. And then you can click into the dividends, and here you see the magic unfolding. As I said, really nice growth over time. If you would have bought back in 2008 when the price was also low of a share of BlackRock, it was $3. Now you're already at close to $20. So you can really see a nice healthy development, and that's what we're after by growing this. And if you invest early and over time, obviously your cost on yield really increases over time. It's the same when you buy an apartment and rent it out, right? You pay the price for the apartment once, but then your rent increases over time. Not the price of your apartment, obviously, when you resell it, but the yield you get on your initial investments, that goes up over time. And that's the same here with dividend investing. So that's where the power comes in, because sometimes people think I'm only gonna get a 2% yield on my investment, but no, over time, that actually goes up tremendously, and that starts really compounding and bring that dividend snowball, and that's gonna bring you the returns and passive income in the future. Then another stock I'm really excited about, and that's called Münchner Rückversicherung or Munich Re, and it's basically one of the biggest reinsurance company in the world. They're basically the insurance for insurance companies, and it's really a powerful stock. It's not as shiny and glitzy as Apple or Google, right? But it's a powerhouse, and I really don't think insurances are gonna go anywhere. Plus, I really want to diversify my portfolio holdings. I don't want to just invest into one sector or industry, so having some insurance is definitely very good. And if I show you the fundamentals of the company, you really see some good numbers over here. I mean, the payout ratio of 36, so that's really low, very good. And yes, looking at the dividends, I mean, really nice development over here for the last 10 years, a growth of 4.6%. Then you can see here over time how it developed nicely. It's a steady producer, there's no major swings in it, so I really enjoy that company and business, and I really want to invest much more into them going forward. One thing to consider though is they pay annually the dividend, which really doesn't make a big difference, right? Most companies actually pay quarterly, some pay annually, some pay monthly, so it really depends on you. But ultimately, if you look at your annual dividend income, it really doesn't matter when they pay, right? For me, yes, I don't mind having a monthly or quarterly payment, but if they pay annually, so be it. I just want to make sure by the time they pay, I maximize my stock holdings so I get a higher return from them. I would like to buy even more of the stock at the moment, but given the price being at the peak, I'm step-by-step dollar cost averaging into them. My next holding is LVMH, a luxury powerhouse. It's technically the most valuable company in Europe at the moment. And in case you don't know what they're doing, it's basically a conglomerate of some of the most luxurious brands in the world. When you go through them, what it includes brands such as Dom Perignon, Moët Chandon, Hennessy, Veuve Clicquot, but also fashion brands like Louis Vuitton, Loro Piana, Fendi, Celine, Christian Dior. They also recently acquired Tiffany & Co. Some of the most amazing luxury brands in the world. Myself, I'm not really into luxury brands. My fiance, on the other hand, is a very good client of that brand. She loves all those luxury products. Myself, I prefer buying the stock. So I'm happy whenever she buys there because that will bring the share price up, right? But honestly, it's a really good investment. And actually the CEO of LVMH, Bernard Arnault, is actually right now the wealthiest man in the world, even ahead of Elon Musk. So that just shows you what a powerhouse LVMH is. And I mean, just looking at the dividend development really tells the story. The growth over the last 3 years has been spectacular, 37%, 5 years, 17%, and even over 10 years, 16% compounded annual growth. So just think about it. Imagine you retire in 30 years from now and the stock keeps on increasing the dividends. That's like a 16% growth on your income, right? When was the last time you got a 16% raise at your work? And that's happening every single year. So it's really amazing. Of course, the past is not a guarantee for the future, but looking at this from the historic numbers, I really feel confident about them at the time that they're doing so well, even considering the fact that China was not really traveling or could do much the last few years. Now that they're opening up, there's going to be a huge demand from China for all these luxury brands. So I think sales over there will pick up even more now that they will come to Europe, other parts of the world. I really think their sales are going to explode. They're going to be adding more brands in the future. So I really feel bullish about LVMH, and I'm definitely going to buy more stocks of them going forward. Then I have a small position in S&P Global. That's basically the rating company, same as Moody's. A really nice, interesting company, but it basically rates investment companies, bonds, etc. So a lot of people buy their insights, reports, analytics from them. Plus, of course, S&P Global is also the company behind the S&P 500. So they do all the indexing, etc. So a really good company, has really healthy financials, has a small dividend of less than 1%. So even though I would love to buy more of the company, right now as my goal is to grow the dividend yield, I will not buy too much of the company, but overall, definitely a company I really enjoy and will buy more of in the future. And lastly, I have Realty Income. Now, I'll be very honest, I probably got biased by watching other dividend investors because every single one I watched literally had that company in their portfolio. So I got a little bit inspired. It is a real estate investment trust, so basically a real estate company, and you benefit from them acquiring new buildings, renting them out. Last quarter, they had a 99% occupancy rate across all their various buildings. So that means they have literally no vacancy. They're really maximizing the shareholder returns. And as such, they're actually paying out a monthly dividend, which is really attractive. As you can see here, they paid out 608 consecutive common stock monthly dividends over a 52-year period. So they have a long track record as well. It's not just a company that popped up on the radar. And they increased 109 times since 1994. So they're really focusing on dividend growth. So as a dividend investor, that's obviously very attractive. And when we look into this, you can see here really the development over time, how it nicely grew. It's a healthy growth. It's not like unsustainable. 3.5% over 10 years is very healthy. And you can see obviously they pay out monthly. So that's really nice. It does have a very high dividend yield of 4.6%. So that's really something, once your portfolio grows and you one day have to depend on your dividend payments, that's definitely going to be one of the bigger contributors to your passive dividend income. Right, so then over here I can click on calendar, for example, to see by month, what's going to be my next dividend payments, who's going to pay me out. So that's S&P Global going to pay me 23 cents. I'm going to have BlackRock coming up. I'm going to have realty income coming up very soon. So it's really cool to visualize what's the next payments coming up. And then I can click into dividends and really see all of it, how it's been doing over years. So as I said, I started with Interactive Brokers in 21. So there was basically no investments. It was only 14 euros dividend. Then in 22, I got up to 145 euros. Now for 23, you can see the projected income. But obviously, as I keep on buying more stocks throughout the year, that number will definitely go up. And then next year, even if I wouldn't buy anything, automatically due to dividend growth, that number would go up once again. So there you can see the power of dividend growth. It's not just staying flat, but really compounding over time. So yeah, so really nice overview of what are the upcoming payments. It even breaks it down by sector, etc. So really love that. You can click also in diversifications, so you can really see what you have by sector, etc. So obviously majority right now is still in ETFs, but otherwise I'm quite happy with diversification. Industry also, you can have a breakdown over here. Then in exchanges, so these are the stock exchanges where your stocks are being listed. AS is Amsterdam in the Netherlands, and that's the biggest part because actually my ETF is listed on that exchange. That's why being the biggest portfolio size in my portfolio, it also is the biggest exchange where I buy from. But for me, that's not really an issue. I wouldn't want to depend only on one exchange, but as I'm trying to balance between US listed stocks and European listed stocks, that obviously will balance over time. I really ideally want to have a 50-50 split between US and EU listed stock exchanges. The type of stocks, obviously majority being ETF, then my dividend yield. And here you can see really something I'm not too happy with, especially going forward. I will make sure to bring that number up because right now, majority of my stock holdings are in the low dividend yield category, 0 to 2%. I want to be in the medium dividend yield. I don't want to have more than 4% over time. I think it's not really sustainable. Often there's a reason behind. If you get a 6% dividend yield, I mean, it sounds nice, get a 6% passive income, but often there's a reason for it. Either it's a declining company where the share price drops. So ultimately, you might be worse off because if the stock price collapses by 50%, but you get a 10% dividend yield, you're still worse off than if it was to grow, right? So that's something to consider as well. So I want to be in the mid-range, 2 to 4%. I think it's healthy, it's sustainable. That will give you a nice annual dividend income. So definitely I want to focus on growing that number over here. And then of course you have the dividend yield and growth. So that's also a nice number to look at. And lastly over here you can see the transactions. So obviously once you've imported them, you can see here at what price you bought what, when. So yeah, that's really nice to have as well there. And one really cool thing you can do over here is if you go back into your holdings and click on calculator, it will basically import it into the dividend calculator and you can project your future potential income and total portfolio value. So right now it takes all my holdings I have, how much shares, etc., at what price I bought it, and then you can play around with a few calculator options. So for example, the price growth, how fast or slow you think your portfolio will grow. You can be very optimistic or not, but let's say I assume a 5% slower rate over time, additional investments per month. So that really depends on how much you can afford to invest. Obviously in the beginning, if you're just starting off, it might be a smaller amount, but then over time, as your salary grows, you can obviously commit to more. So let's say in this case, I'm going to put 1,000 euros I want to invest every month. My calculation currency is euros. Then you can put your dividend income tax, depends again on your country where you are. In my case, it's 15%, and then investment length period. So you can change that number over here. And then do you want to reinvest your dividends? So definitely you want to reinvest your dividends. In the beginning, you don't want to live off your dividends because anyways, as I've shown you right now, for me, it's like 200-300 euros. It's not worth to live off it. So rather you want to reinvest and buy more stocks with it. So if you do that over time, you can click on calculate and you will see really the power of compounding. So from here you can see my portfolio will reach a portfolio value of 1.2 million and I will have an annual dividend income of 13,000 just passively paid to me every single year. So that's really nice, and obviously as time goes on that number would go even higher. So that just shows you the power of compounding growth investing. However, that's based on my current portfolio and it could be much higher. As I've shown you, I invest right now a lot in my ETFs, so that has a higher weighting in my portfolio, and as I said, it has a low yield, and that's why the annual dividend income is not growing as fast. So I give you another example. Let's go into my watch list over here. So these are some of the stocks and companies I want to buy more of, and I'm going to run you through it in another video. But yeah, anyway, so let's copy those to the calculator. Then let's just assume I have one share of each. So obviously the starting value would be less than what I have right now. I have the same parameters over here I had in my previous example, and then I'm going to click on calculate, and then you will see, wow, what a difference it made. I mean, total portfolio will go up to 1.7 million, but the annual dividend income will reach 91,000 euros per year. I mean, that's a huge difference, and that's because we invest into more dividend paying stocks. And that's the beauty of dividend growth investing, because even if the portfolio, remains a little bit flatter overall my dividend income will significantly increase, and there I'm not so dependent on the stock price, which might go up, might go down. Nobody knows what will happen in 30 years, right? I'm sure we're going to have a lot of crises down the road, but my annual dividend income will definitely skyrocket over time. So that's why I'm so bullish on investing every single month a small amount into my dividend stocks. Now, obviously, if you earn more money over time and can afford to invest more, then you can change it to, let's say, 2,000, and you will see how that changes dramatically as well. Your portfolio will reach almost 3.5 million euros, and your annual income will be a staggering 181,000 euros per year. I mean, if you break it down to a monthly income, that's very healthy and more than most people actually make actively working. So yeah, really, really powerful. And that just shows you why I'm so excited about dividend growth investing. And I will do that every single week and month going forward. I'm going to take you along with me on the journey, share with you my wins, my losses, my learnings. If you want to check out the tool Dividend.watch, please use my link in the description below. If you enjoyed the video, please give it a like, subscribe to the channel. It means the world to me. As always, thank you so much for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.